Hi, this is James Zhang, and I'm here with Emily and Adam. And today we're going to be talking about their most recent deal, North Haven Terrace, and talk a little bit about the acquisition and sort of the rehab throughout the process. So, welcome. And maybe to kick it off, Emily and Adam, give us a little bit of your background, and then we'll get into this deal.
Absolutely. My name's Emily Courtwright, and this is my husband.
Adam Roberts.
And we are engineers by trade, but now we are both full-time multifamily syndicators. We started investing in single-family real estate in 2013 in the Dallas-Fort Worth area and got into multifamily in 2017. Since then, we've syndicated two large deals, one in Arlington, Texas, and this one about a year ago, May of 2019, in Northwest Dallas called North Haven Terrace. So today we're going to focus on North Haven and talk about the acquisition and some of the Capex that we've done.
Perfect. So Emily and Adam came from sort of the grassroots that I came from in the old stomping grounds of GE. And we sort of I went through the finance program. These guys went through, I don't know, which program was it called? Was it IT
The operations?
Operations. Okay.
Mm-hmm.
Yeah. So, we come from the same sort of background, and let's jump into this deal. So how many units was this deal again?
It's a 208 unit
Okay.
C-class asset, Northwest Dallas.
Okay. And this deal, was it listed on the market, or how did you guys find this deal?
Yeah, it was an openly listed deal on the open market with a major broker in the DFW area. And so we found it just like everybody else. It was highly competitive, as deals were last year, multiple offers going into two different rounds of best and final.
And so do you guys remember how much hard money you had to put on this deal to win it?
Yeah, it was $300,000 hard money, day one, not contingent on any financing or any due diligence findings. But to that point, luckily for us, the sellers were very high integrity. And we could tell that just by the way they managed the asset. They were kind of a known entity around town. And so that obviously made us a lot more comfortable through the transaction.
Yeah. And I mean, this seller went through multiple rounds of sort of best and final, and then they had you on a call, then they had you sort of submit another offer. So, I mean, very different than today's market. And, once you guys decided, all right, once you guys were awarded the deal, how'd you guys decide on sort of the loan and the equity raise process? Maybe go through that.
Yeah, so we worked with Old Capital very closely on the financing part of the deal. We were able to secure a 5 years interest only Fannie Mae loan that had a 12-year term, fixed rate financing. So again, that kind of speaks to working with a lender you have a great relationship with, makes you feel better about the hard money you're putting down. That fixed rate financing obviously is going to help us through any sort of economic situations that occur over the next 12 years. On the equity side of the deal, we ended up partnering with a good friend and business partner of ours, Aaron Katz, to see through help with the equity side of it. We both worked with our investor bases to bring the equity to the deal. It was about a $6 million raise.
And what was the minimum on that raise that you guys had?
75,000 minimum investment.
75. Okay.
Mm-hmm.
And then I guess, when you guys were looking at this deal, obviously there was a lot of deals on the market last year. What did you like about this deal when you were bidding on it?
I'd say on the emotional side, which we all try to stay away from, it was a beautiful property, very low density, a lot of green space for such a hot area of Dallas, where it's a lot of, that area of Dallas is just a lot of concrete. And this had just a lot of open space, kids playing on the playground, families, very family oriented. The broker and the management team on site just couldn't stop talking about how special of a place it was. So that was more the emotional side. But of course, we look to the financials to see if it tells the same story. And the stability of the trailing 12 months financials was just spot on. It's like you could forecast exactly what was going to happen over the next several years, given the demographic, given the tenant base in the area. And once we got into the deal, working with the seller, the high integrity seller, it pretty much, that was the icing on the cake.
Was there any, you mentioned a couple things here on the slide around sort of utility opportunities and potentially reserve parking and lease renewal strategy. Maybe talk about that, and then start talking about that, and we'll jump over to the next slide of sort of what you guys have done. You guys have owned the property for about a year and a half, or
Yep.
how long? Oh, about a year. Okay.
About a year, yeah.
All right. So what have you guys done so far?
So the biggest project that we had in the most time sensitive was the water conservation. They were actually spending a lot of money on water. And when we did our due diligence walks, almost every single unit we walked in had either a leaking faucet, a leaking shower, or the toilet was running. So we knew that this was time sensitive. We worked with SAS Water Conservation to do the full package, the 0.8 gallon per flush toilets, the aerators, and the shower heads. And another thing that they did was provide us a list of all of the leaks at the end, because they were going in every single unit. So they gave our maintenance team essentially a punch list of all the leaks that we had to go back and fix. So once that was done, we almost instantly realized a $10,000 a month savings, which comes out to about $120,000 a year. And the whole package cost us about $110,000. So it's a great return on investment.
So in 1 year, you essentially save all that money. And I guess, I don't know if we mentioned this deal is all bills paid, right? So
Correct.
There's no rubs or anything. So this is all going down bottom line to you guys. Any other sort of Capex on the interiors?
Usually we wouldn't, brag about a $7,000 project, but the lender required us to install fire extinguishers in every single unit. Okay. And this wasn't something we had originally planned. We put it into the budget and got it done within about the first month or so. And literally like 2 weeks after we installed the fire extinguishers, there was a fire started on a stove, and the tenant was able to put out the fire with the extinguisher that we just installed. So for such a small investment, this saved potential down units, building damage. Who knows how big the fire could have gotten. And it's a lesson learned for us that we'll continue to do in future properties.
Yeah, I mean, I guess that's one thing to start looking out for is figuring out like if you have fire extinguishers in all the units. So in your Arlington property, do you have fire extinguishers in all the units now?
We did go back and put them in. Yes.
Okay, all right. And then I guess on the exterior, did you guys do anything on the exterior so far?
Yeah, so Adam had done a market study when we were during our due diligence and found that every property in the area was offering reserved parking. The tenants at North Haven were wanting it, and by the demand in the other properties, we knew that it could be successful. So we've implemented over 100 spots, and right now it's bringing in $4,400 to $4,500 a month, which comes out to about $53,000 a year. And the investment is almost minimal. It's some paint and a stencil, so it's almost negligible, the initial investment.
So before it was zero, they had no
Correct.
reserve parking. Wow. Right. So you've completely, that's great. And then I guess anything on the amenities, signage, roof recoating, anything like that?
The stone grill and the pergola, I put a picture there. It was an $11,000 investment, and it's just another thing to add to the community. The residents use it a lot. We put some picnic tables underneath it, and even the leasing staff, they'll have days where they grill out for the residents. So it's been a great investment for us, and adds to the community of the property.
Yeah, I'm pulling up just your website here and just giving people an idea of sort of, so this is the leasing office someone comes in through, and then this is sort of community areas. I guess any other comments on sort of, is this an interior update or
Yes.
interior upgrade? Okay, so what have you guys done? I know it didn't look like this before, right? In terms of
we've
class.
Very classic. Yeah.
Yes, and actually it had the green and yellow tiles along the wall in the bathroom. So those are sprayed.
We got to get some of those pictures. Okay.
Yeah. So those are the before pictures. But yeah, we've done the vinyl planks, resurfaced countertops, and then we resurfaced all the colored tile in the bathrooms to spray them white. There you go. There's a picture of the after.
So this was green? The tiles were green before?
Think Easter colors.
And you sprayed them?
Yep.
Or you okay. All right.
Yep.
Mm-hmm. Well, okay. No, that's great. Yeah, it looks complete. Okay. And then how much is this on the interiors? How many updated units have you guys done?
To date, over a year, we've done about 110 units or so.
Oh, wow.
Um,
Okay.
yeah,
So
it's
you've done
important. It's
about
important.
50% of them. Yeah.
Yeah,
Okay.
it's important to note too that this specific resident demographic will come and request updates, even if they're staying.
Okay.
So, although it's kind of a delicate activity, we have authorized if a resident wants to pay market rent and they would like their unit repainted, or they would like to move their stuff out of the apartment and let us do the flooring. Although that's a very kind of delicate agreement that they have to sign up for.
Right.
It saves us money. We'll spend maybe $1,500 and then realize a full rent bump. So that's the reason for such a high number in the first year. Some residents were retained; they didn't necessarily move out.
So the I guess the classic units, is it still carpet in there? Or
It's
what was
a
in there
it,
before?
it's a
Just
mix.
mix. Okay.
I would say it's a lot of old vinyl flooring, so the old look wood,
Okay.
along with tan paints.
Yeah.
Baseboards were probably also tan.
Okay.
Appliances, from an interior perspective, the bathrooms and the appliances were the most dated items. We're replacing a lot of 20-year-old refrigerators. Obviously, you guys talked about the bathrooms. Every unit had a 5-gallon tank toilet in it,
Okay.
and I haven't seen one of those for
So this is
decades.
is that the
There's the
old,
five. That's the
that's the
five
old
gallon.
one.
Yeah,
Okay.
that's the.
Okay.
Yeah. Mm-hmm.
All right, perfect. All right, so let's jump. I'll jump back to the slide here, and then I guess it's taken a year to sort of do about half the units, and now with the whole COVID-19 thing, how sort of the rhythm, collections, that type of stuff going with in terms of managing this asset as the asset manager.
It's been, I would say, good considering the circumstances. Again, we have the residents that live in this community, I would say, are they're very thoughtful when it comes to their income, even though we have had a lot of employment loss, as everybody has. Residents are finding ways to bring money in other than necessarily government aid. We do have a lot of residents that are receiving unemployment and other government aid, and they're prioritizing their rent payments, which is, I think, fantastic,
Right.
because we still obviously have bills to pay, et cetera. But on the communications side, Emily and I absolutely pride ourselves in keeping our partners informed of what's going on at the property, good and bad. The communication has increased quite a bit. We've sent out some video communications, and we tend to reach out on a weekly basis. Again, even if there's really not much to report or there's no significant updates, it's a touch point. It's easy, and I think it brings the investor a little bit closer to what's going on in the economy in general.
Oh yeah, no, that's perfect. So I'm going to hit you with some rapid fire questions here, if you guys are ready. So, key members, sort of acquisition, rehab, asset management on this deal.
So for the acquisition, we used Old Capital Lending, Callison Associates for our SEC attorney. We also worked closely with Wayner Multifamily to do the due diligence. They also do the interior rehab, and some of the vendors that we worked with included SAS, Aero Fire and Safety, and mostly Wayner construction team.
Okay.
Yeah.
For asset management, Adam and I are the asset
You
managers.
guys are the guys, the key members.
We're the key
All
members.
right.
Yeah.
What's the biggest obstacle you've had so far on this deal?
I would say one challenging item we've dealt with over the year has been thermostats.
Okay.
We did opt to take a Green Rewards program loan through Fannie Mae, which essentially got us special pricing on our loan terms. And on our side of the deal, we implemented the water conservation,
Okay.
as well as we are required to install smart thermostats. And initially thought that it'd be as easy as plugging a thermostat onto a wall and hitting the on button. But what we're finding is the thermostat technology is definitely decades and decades ahead of the HVAC technology at this specific property and many properties that that our colleagues own and operate. So
Okay.
we have had to tiptoe around how do we get 2020 technology to work with a 1985 air handler and
Okay.
communicate with it. And it's been significantly challenging. Not, we have solutions in place. It's been a lot of work, time and effort.
You just didn't expect the $150, change to be that big. I mean,
Yeah, exactly.
all right. And then I guess what is one thing you're going to do the same on your next deal, and one thing you're going to do different on your next deal?
One thing that we would like to repeat is that this deal was extremely stabilized. It was
Right.
very much a yield play. The value add component was very small. And so that means that it cash flows really well.
Yeah.
That I think is going to be very important in the next couple years to really focus on purchasing strong cash flowing properties, or properties that have the ability to cash flow very well, because that can help us ride the ebbs and flows of the market. So that's something I think we'll do the same for the next one.
Yeah, I think another thing we'll probably continue to do over the next several deals is really prioritize the people aspect of the business. We ended up retaining the manager on site from the sellers.
Okay.
The sellers did not have a place for her to work after the sale. And after, obviously we interviewed her and put her through, the proper activity, but that's just been hugely invaluable. She understands the residents. She knows the property. She has the same goals that we do. And really, it's about the folks that work at the property. I mean, Emily and I, yeah, we're good at operating and setting the expectations, but, we prioritize the people. So I think we'll just continue to do that.
Yeah, I mean, there's so much knowledge that those, especially, I don't know how long she's been at that property, but there's
Mhm.
just so much sort of tribal knowledge that the staff has that you just can't relay
Yeah.
to the new person in any way.
Yeah.
Anything that you're going to do different from this one versus the next one?
I'll speak for Emily. I think different for the next one is maybe hire a general contractor to manage some of the exterior repairs. Again,
Okay.
this one was a more simple value add. There wasn't, I could probably count on two hands the number of projects that we had to manage, but it's time consuming. And so I think it would be valuable to everybody involved, investors, the general partners, even the folks working at the property, to kind of have one single point of contact to work with, instead of Emily and I always sending emails over, hey, is this done? Is that done? When are we spending this money?
So it's
So
more maybe just building that into the
mhm,
rehab budget, just build in sort of a GC
exactly.
fee, hire that person, bring it in, and have
Yeah,
them sort of knock out all the exterior stuff
absolutely.
as soon as possible. All right, great. How does this deal compare? I know you guys are GPs in other deals and LPs and potentially some other deals. How does this compare to other deals out there?
So we do have more passive investors in this deal than we did our first one. We're up to 77 passive investors. And so the investor management side of it just becomes a little bit more complex with dealing with that number of people. So that's one of the differences.
Yeah, and when I compare this deal to maybe some of our passive deals, I think the financials were very predictable. I think that the resident demographic, the submarket, presented a very good forecast of what the financials could be, and it was backed up by a very solid market study. And so I haven't seen that in a lot of our passive deals. I think a lot of our passive deals were maybe more value add. And again, the people. We've had a few of our passive investments where there's been a lot of challenge to find the right people to work at the property.
The
And
staffing of the
yeah,
property.
Mhm.
staffing,
Yeah. Okay.
especially as we kind of go through this economic bump here where people are moving and shaking with regards to employment and things of that nature.
Yeah, I mean, one of my things that I like to look at is, I like the T12, but I also like 2017, 2018,
Hmm.
2019 financials to see how steady the deal has been throughout, and I mean, especially let's say you're buying something in 2021, seeing how 2020 financials look is
Right.
going to be a great indicator of how steady the property is. And I guess to wrap, sort of what is one thing that sort of you guys think differentiates you from other GPs out there?
I think the way that we communicate to our investors, as well as the way we communicate with the property management team, really helps us get the best outcome for everybody. Both of us have had leadership roles in corporate, and we've learned to manage people. and it's a delicate relationship with the property management company to manage them and work with them to meet shared goals. So I think we have a great relationship with our property management team, the regional manager, and the leadership team at the property management company. And that really helps us get to the goals in the most efficient way we can.
Yeah. And as far as, deal analysis and the acquisition of real estate, I think we have a tried and true method. Like you mentioned in the beginning, James, we kind of came from a corporate background where, expectations were laid out and here's the financial goals. And so that translates really well to the handling of financial returns expectations. And with our single family background now transition to our multifamily background, we know exactly what needs to get done from a value add perspective, the speed at which expectations need to be hit, and when the projects need to be finished to lay out a pro forma. And we've become really comfortable with that over the past several years. So we feel like our say-do ratio on the financial aspect of the property's performance is really good.
Well, I'm going to add on, I've done hundreds of loans and I've never seen anyone more organized than you guys on getting due diligence turned around. And if it is a representation of, I think, your organization and ability to do that on deals going forward in terms of, going from loan side to the actual asset management side. So I think that's huge and a big differentiator for you guys. What's the best way for people to reach out to you if they have any questions about this deal or potentially other deals in the future?
We'd love to have them visit our website at aemultifamily.com, or you can email one of us directly at adam@aemultifamily or emilycourtright@kw.com.
Yep. And we love to interact with new investors or folks that are looking to kind of broaden their investment portfolio. So definitely reach out to us.
Yeah, we'd love to set up a phone call.
All right, great. Thanks a lot, guys.
Thanks
you,
James.
James.
Have
Appreciate
a great
it.
day.
That's it. Bye.